Welcome to this episode of Hardman Talks. I'm Larissa from Hardman & Co, and I'm excited to be joined by Robert Mundy, founder and CEO of Research Tree. Robert, hi, it's great to have you on our channel.
Let's be on board.
So before Research Tree, you were a sell-side analyst in the oil and gas space. So would you like to just give us a quick background about yourself and your experience transitioning from analyst to entrepreneur and how Research Tree came about?
Yeah, so a bit of background. I used to be an analyst, as you said, at Liberum. I was on a trading desk for a little bit of time. Then I was an oil and gas analyst. Then I moved to Credit Suisse, and I led the exploration production research team there for a period. And then we'd worked this idea up in the background over a course of many months, and spoke to various brokers and to sort of take the temperature, see if it was something that would be of interest. And it got to a point where we either pulled the trigger and did it, or got back to the day job. And so this was back in 2015. Handed my notice in, started the business, spent a year building the platform with an in-house development team who we still have to this day, which is, I think, probably one of our core strengths. And we've been building and iterating and growing ever since.
Amazing. And I suppose being in the position that you're in now, you're in a really niche area within the financial services world. So, you're observing a lot of what is happening in equity markets from all the market players like quoted companies, brokers, research houses, and of course, institutional and retail investors. So I think let's just talk about some of the interesting themes that you've been exposed to in the last 12 to 18 months. And I think probably a good place for us to start is the retail investor. And there's always an underlying struggle for retail investors to get attention from investor relations when they're working their way down the share register. So what are your thoughts on that dynamic?
There's definitely been a big increase in attention across the city. So from brokers, advisors, PR advisors, other research houses. Obviously, you guys are tailored towards the retail investor, but I'd say across the city, there's been an increase in focus on retail investors, and you've seen other services pop up. So Primary Bid are doing very well at the moment, offering something that's solves a bit of a problem there. Investor Meet Company and a bunch of other event providers, PI World, these guys all kind of popped up and are doing a great job as well. Obviously, Hardman have been around for a long time, doing a great job with their research and events, and it's become more of a focus. I think it's maybe something to do with the pandemic. I don't know if it's to do with the fact that people are at home or have been at home with more time on their hands, but there's definitely been a surge that we've seen on our platform in retail investor activity, and there's been a greater awareness on the banks, brokers, and listed company side that it's an important thing that they need to get a hold on and effectively communicate to as a section of their share register.
Yeah, I don't think it's something that the sort of intermediary financial services can ignore anymore, and it's something that's definitely been accelerated in lockdown. It's come up in other interviews where we've talked about the more youthful investor coming on board and taking a look at markets for the first time. And so it's an interesting space to be in. I suppose it sort of like leads us into the next part. So, I mean, there's always been a discussion around retail investors having the same access and opportunities as institutional investors. And I suppose you've already said it's like there's a lot of companies that are working to increase the number of services catering for retail investors, from access to deals, to research, and to events. So I guess, do you have any more thoughts or any more views on that?
Yes, and that is one of the core things that we try and deliver as our company. Is we try and remain as neutral as possible. We aggregate content from research providers, event providers, obviously the regulatory news, wires, videos, and our main goal is really to connect the company and the the research providers and event providers who work with those companies to the end investor as easily as possible. So that's been our main focus ever since we started, and that's going to continue to be our focus, which is why it's important for us to work with new companies when they come on, as well as established companies to get their content and then get it out to the listed company's website, get it out to the London Stock Exchange's website, on our own platform, so that investors have as much as they need at their disposal when they're making their investment decisions.
Yeah. And so from the actual corporates and the quoted companies, from their perspective, do you think it's their opinions have evolved regarding investor access? We sort of talked about it now, wanting to get the word out and their personal branding message and their narrative out to the markets. So yeah, what are your thoughts? I think you've probably interacted with quoted companies and have firsthand experience with that.
There's becoming more of a realization, I'd say, over the last maybe 2 years or 3 years, that the whole share register is important. And it's not to say that the big institutional investors aren't important. They are still crucial for a corporate who are trying to build a nice, solid share register. But if you're concerned about liquidity, especially if you're at the smaller end of the scale, a lot of that daily liquidity, a lot of that price discovery on the markets is not going to be driven by the institutional guys. Some of it will be driven by the PCBs and wealth managers, who are institutions that trade in slightly smaller sizes, and a lot of it day to day will be driven by the retail investor. So being able to have an effective IR campaign for each of those different cohorts down the share register, from the massive fund managers down to the retail investor, is becoming increasingly clear that many companies are now seeing that as a holistic thing they need to get on top of. So they need to be able to provide the access that retail investors need to help with the liquidity on a daily basis, but they also obviously still need to be in close contact with their key, much larger institutional investors who might be holding 2, 3, 4% of the company. Yeah, absolutely. So, okay, moving on a little bit. So I think it's probably been felt by everyone in almost all industries that COVID has been the great accelerator in digitizing markets, investor relations and communications. So how has this impacted life at Research Tree? And do you have any thoughts around this? We saw, it was an interesting time. So back in March 2021, March 2020, blimey. We, like every other company, were trying to think, how is this going to affect the business? Are we going to get a slew of subscribers cancelling to try and preserve their capital? And there was a bit of a period for about a month of uncertainty, and then we saw a really quite strong surge in demand for our services, but also just demand for other services across our wider business. And again, I can guess as much as everyone else can guess. I don't know what the exact reason was, but there was clearly an increase in interest from the retail investor space. But then there was also a related increase in interest, I think, from the corporates once they had got over the first hump of the first pandemic, and worked out where their business model was at. Obviously, everyone was worried about paying creditors and receiving debtors and keeping the balance sheet healthy. But after that, there was a real drive to digitizing everything. Obviously, all events went virtual almost within about a week, and that was actually and you guys would have had the same experience, and that was actually a very smooth process from what I could tell. Most companies managed to adapt very quickly, and a lot of that will be here to stay, I think. I would imagine that as things return. And yesterday, just outside on Cheapside, the place was bustling. So people are returning to the office now. Physical meetings are going to return. Face-to-face corporate access will return, but I think there's going to be an ongoing trend of a chunk of the investor relations will be done virtually now, just because it's so much more effective in terms of time management.
Yeah, I think we're sort of seeing the same trends. And I was actually having an interesting discussion how even webinars, people are sort of webinared out at the moment. And it could be, I think people are sort of going towards pre-recorded, and you can watch it at your own time. So even dialing in for a live webinar, even that can be sometimes, well, I think everyone's just sort of had enough of it at this point. So it can be a bit of a mix and match. So yeah, interesting. We've seen the same things happening.
Yeah.
So changing gears slightly. So MiFID II, it's driven a huge change in business models, especially at the smaller end of the markets. So what are your views on this?
It's been a bit of a bumpy ride. And it's difficult to kind of answer that question with one answer, because it's a different answer for different sections of the market. I don't think it's controversial to say that it's been slightly damaging, or not slightly, but it has definitely impacted the smaller end of the market. So the smaller companies, the mid-sized companies, there has been a reduction in coverage, in research coverage, and you can debate whether or not that's a good thing. I think that's not a good thing, and I think now that you're seeing a rowback of some of those a few years down the line now, a rowback of some of those regulations for the smaller end of the market, that kind of shows that they realise that there's been a bit of friendly fire there. But then at the other end of the scale, it has probably made things a bit more efficient at the larger end. You don't need. I used to be one of, I think it was maybe 25 or 30 analysts covering Tullow when Tullow was a very large oil and gas company. You don't need 30 analysts covering a company. So no, it's had some positive impacts. It's definitely had some negative impacts. And the landscape has shifted massively. You've seen, because we see, obviously, we work with all of the research providers, just to focus on research for a second. And you've seen the business models change quite dramatically in some cases. Some of the brokers have adopted elements of the commission model, which is probably a source of frustration sometimes for you guys, but there's been a bit of a movement into that space from the brokers. Other ones have really pulled up the drawbridge and focused on the very higher end of the market. So it's been interesting. There's been a lot of adaptation, and it's still changing right now. So we're still seeing brokers and their willingness to make their research more widely available. We're seeing that there's a clear tailwind there. It's not fast moving at the moment. It is incremental, but yeah, so I see a lot of change there. And then one other part, I know it's quite a long answer. One other thing that we've seen, and we really try to spearhead, is the movement into more and more brokers having their own research portals, more and more listed companies having their feeds embedded in their websites. So we provide these research feeds embedded in company websites, and it just means that all that time and effort and cost that goes into writing those research notes, that's the big body of work. After that, you really need to make sure that it's as widely distributed as possible, it's as visible as possible, and so we've responded to demand from companies by creating these research feeds so that they can embed those research notes compliantly in their own website. We're seeing a really quite significant uplift in readership consumption now that we've been doing that for about just over a year off the back of those feeds, because obviously one of the key places for an investor is the company's own investor relations website. So having that research there visible there is a real positive for them. So there's been a lot more of a movement from the company side into thinking about how they can enhance their website, I guess, is the second part of my answer.
Yeah, I think they've had to, and we're having similar discussions with a lot of the corporates that we deal with, and encouraging them to put the research on their websites and events, anything that is to do with addressing investors. It's got to be visible, and it just helps when all parties involved are on it, even from social media as well. So it's we're of the same thought here. So I mean, we've you said as well about the coverage, and I suppose some of the regulations for mid-cap companies have been rolled back a little bit, but do you think it's almost too late in a way? Do you think that we're already sort of seeing and feeling the effects of this in that end of the market?
I don't think it's too late, but it is quite late, and it was well flagged beforehand by pretty much all players in at that end of the market that this would be a consequence, and it was pushed through anyway. So yeah, I think markets always adapt pretty strongly, and if you look at it on a 5 or 10 year view, I think things will start to come back, and you'll start seeing hopefully an increase in coverage again, perhaps an increase in a better way, less maintenance research, more actionable research, as well as tying it together better in terms and connecting the market better in terms of the digitization side of things. So it might end up being a positive in terms of it catalyzing change on a sort of 10-year view, but it has done damage to coverage, and therefore the investors or the market's understanding of companies and their risk profiles and opportunities, etc., in the shorter term.
Okay, so lastly, we're now heading into the final leg of this year. So how does the rest of 2021 look for Research Tree, and which areas do you see there being potential business growth?
We're busily embedding research feeds in company websites. So we've done many dozens of them now, and we will carry on. That's a long process. We're busily embedding portals for brokers. So there's one I can't mention right now that is a relatively large broker we've just signed up. So we're becoming much more of an infrastructure provider, and we see ourselves as just connecting investors and companies and their providers. That's what we're trying to do. Hence our feeds into the API, into the London Stock Exchange. And we're hoping to expand those feeds. We're hoping to expand, as I said, the research feeds embedded on company websites, and we also think that the amount of research available on our main bundles will expand over time. More providers are coming on board all the time, and I think and some of the providers that are in our wider ecosystem are putting more and more content into the main research bundle. One example would be Exane BNP Paribas, a huge, very high quality investment bank. All of their research is available to our institutional users, but they are also putting some of their content into the more widely read bundle. And I think the more content we get into that bundle, the more attractive it will be. So we should see a bit of a tailwind there as well in terms of subscriptions to our Research Tree platform.
Great, lots happening.
Yeah.
Okay, thank you for your answers, Robert. It's been an absolute pleasure chatting to you. And to our viewers, please don't forget to like and subscribe to our channel. We appreciate your time. If you've got any thoughts on what we've discussed, please do join the discussion and share your comments below and hit that like button. Otherwise, we'll see you back here on Hardman Talks next time. Thank you.